What's going on, everybody? Welcome to another capital hungry video. Today I'm going to be discussing US inflation data next week with a focus on headline CPI year over year. Inflation data has been an extreme focus for traders and investors as the cartel of the currency, aka the Federal Reserve, has been actively tightening financial conditions with the primary goal of bringing inflation down to a goal of 2% and maintaining it there while still having maximum employment, aka a soft landing narrative. Now, the trouble with inflation is that it was very easy to bring it down from the high risk levels of 9% back down to 3%, but the real issue is when you come back to the baseline and you have to do more than monetary policy tightening to achieve those goals. Remember, the Feds do not want to repeat the same mistakes that occurred in the 1970s, where if they pivot too early, then inflation will spiral absolutely out of control. They have to keep rates up and financial conditions tight so that inflation not just reaches their goal of 2%, but maintains there for a consistent period of time. To do this, there's going to be sacrifices within the US economy. Increases in unemployment rate, decreases in economic activity, which will be highlighted when we're looking at PMI figures, further suffering of the consumer and your general worker. It's inevitable to see these sacrifices in the economy to reach those goals of 2% and maintain inflation there before the Feds can think about pivoting at all. But the greedy crackheads with capital, aka the stock market buyers, they're always trying to have an edge and be ahead of the curve, and they've been hoping for either two things: significant declines in inflation to feed the pivot hopes and see potential of rate cuts in 2024, or economic data getting so weak that the Feds need to jump in and support the economy again. It doesn't look like we're going to be seeing that take place anytime soon. With energy costs still going up, with the labor market just only starting to show signs of cooling, and with policy lag effects just starting to become prominent, we can still see inflation showing a lot of trouble back at baseline around 3%. If year-over-year CPI figures are higher than expected, showing fluctuations and trouble with inflation back at baseline, this brings the focus back on Fed's tightening of financial conditions, prices out any chance of 2024 rate cuts, even brings another rate hike possibility to the table, and will lead to further demand in the US dollar, with us trading well above 104.5 important liquidity zone, as well as gold being bearish short term on hawkish Fed pressure and stock market being more bearish. Otherwise, if inflation is showing significant signs of decline, getting closer to the Fed's goal of 2%, then we can see this still supporting the soft landing narrative, leading to hopes of pivot and potential 2024 rate cuts, with the markets rallying on the greed and seeing some stock market upside, gold bulls, and dollar more bearish. I personally think inflation is still going to be seeing a lot of trouble back into the sticky zone, can still be relatively elevated. We won't be seeing any major spiraling out of control. We're starting to see trouble of going down to 2% and fluctuating at these historical levels, with energy costs rising, labor market still showing some signs of resilience and not full policy lag effects felt yet. We could still for sure see some increases in CPI data. If my prediction is correct, we're still going to see some more dollar demand on a macro perspective, more pressure and expectations of hawkish policy stance from the Feds, and we're going to see that further outflow out of the stock market. Otherwise, if my timing is off and CPI is still steadily declining, just adapt to dollar bears, gold bulls, and stock market bulls. Keep in mind, as we go into 2024, policy lag effects are going to become more apparent. There's going to be way more weakening in global economies, increased probability of geopolitical tensions, and a lot more uncertainty that will be unwinding into the new year. Always trade safe with the data reports and news. Let the news get released, let the noise and dust settle, confirm the sentiment, grab your piece of the pie, and live to trade another day. Just a short, quick, brief personal video on expectations of US inflation for the next week's report.